Aw.
Hello, 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 everybody. Hope everybody is doing absolutely wonderful. We're looking forward to great ministry tonight with our financial wellness ministry. Everybody that's watching on social media, we invite you to go ahead and share this post. And do me a favor, just so I know we got some friends out there. When you share the post, press share. Write share it for me, so that I know that we have some friends out there. If you have somebody that you know that needs to be a part of this conversation, make sure you tag them in it. And if you want to come on Zoom, look in the comments on social media, and there's a link so that you can get right in here with these panelists. This is our financial wellness ministry with Greater Bethel AME Church, and I'm real excited because I see somebody that trusted me to be her pastor when I was trying to figure out how to be a pastor 23 years ago. And so, Tanya, it's good to see you, darling. And Kiera surprised me with that when she didn't tell me that you were going to be on here. So I know you all are going to have, I see Brian. I know Brian, I've already had some conversations with him. I know he has some good stuff. And this young lady that just looked like she know what she's talking about. Progress Foundation. I'm sure that's not her name, but that might be her organization. I'm sure she has some good stuff. And so we just want everybody to share this. We want you to get the word out there. I want you to get the word out there that we are talking about investments, and we're talking about investing in entrepreneurship, running a small business, because we have to empower our people to not be dependent on someone else to bring you financial wealth and to build your legacy. And so get the word out there. Go and run and tell that. Go and share this post, share this post, share this post. And I'm going to put you in the hands of my daughter, Kiera Hall. She's the coordinator of our financial wellness ministry at Greater Bethel AME. And so, Kiera, I place everyone in your hands.
Well, I'm super excited. I'm not going to talk much because I don't want to take away any time from these amazing people. And I'm so excited to hear what they're going to be speaking about tonight. For our first segment, so tonight will be divided into 3 segments, and we're dealing with investing and entrepreneurship. And so first, we're going to talk about investing in the market and different types of ways to invest. Then we're going to speak on entrepreneurship. And we're going to close it out back with investing. And so we're going to mix it up, investing, entrepreneurship, and then we're going to close it out with real estate investing. And we're going to hear some just amazing points and tips from each of our speakers. And then we'll have an opportunity to ask questions as well. So Tamia, I am going to go ahead and turn over the mic to you. But first off, I just have to say, you guys, that she has an amazing show, an amazing page on Facebook, which I'll be sharing on the link. And I'm just excited to learn from her. Her testimony is super awesome. I'm not sure if she's going to share it, but it's super awesome about how she got into investments and how it's been able just to be a huge blessing to her life. And I'm excited to learn from her today. So I'm turning it over to Progress Foundation with Tamia.
Thank you, Kiara. And what a blessing to be here. I'm so glad that you offered for me to come here and share. And hopefully I'll be able to help someone today. And I just want to say, first of all, this is for educational purposes only. And it shouldn't be construed as investment advice. I'm not giving any kind of stock picks, but I will educate you on how to research stocks, and then you can determine for yourself what to invest in. So number one, create space in your budget for investments. The first thing you can do is to look at your budget and see if you can actually afford to invest in the stock market. So remember, investing in the stock market is a risk. Nothing is guaranteed. So what I teach is to use only your disposable income, which means this is money that you have left over after paying your expenses, your savings, and other financial responsibilities. Okay, this is money that you should consider to be at risk, which means this is money that you don't need and that you are willing to lose. Now, once you have identified your disposable income, then you can decide how much to put towards an investment fund or a brokerage account. And then you can put that amount into your budget. So this is how you can create space in your budget for investments. Number two, know yourself. You have to get in touch with your investment personality. And there are two ways you can do that. Number one, by looking at your risk tolerance, knowing how much risk you are able to tolerate. And number two, by looking at your investment goals, whether it's long-term or short-term. You might be looking to build your retirement fund or invest in dividends or turn a small profit within 6 months or 30 days or 2 to 3 days. So how do you feel about investing in the stock market? Are you someone that able to take the ups and downs of the market and you want to turn over a profit within 6 months or 30 days or even 2 to 3 days? Or you might be someone, where you can't tolerate the ups and downs of the market and it stresses you out, but you rather let your money grow over a long period of time. So if you can take the ups and downs of the market, you might be able to become a day trader or a swing trader and turn over a profit. But if you can't, you may want to concentrate on long-term investments. So get to know yourself and identify what your investment personality looks like. Number three, find a brokerage that's right for you. Okay, I did a quick comparison of 5 apps, and I got this from stockbrokers.com, and they have an awesome comparison tool online. I put in TD Ameritrade, E-Trade, Fidelity, Robinhood, and Mirror Edge. So all of these brokerages have a zero minimum amount to open the account. And then all of them also have zero commission fees to trade stocks. However, there's different fees when it comes to trading stock options. So Robinhood is the only one out of the 5 that I mentioned that doesn't have any fees for trading stocks or stock options. They're both free to trade. So, but according to stockbrokers.com, Robinhood also has a low rating when it comes to research and platform tools. So you have to access, you don't have an access to a stockbroker with Robinhood. So some people like to be able to call up their stockbroker and get some financial advice on a particular stock or a certain industry. And they also don't offer any mutual funds. So you just have to do your research and see which brokerage is right for you. Okay. Number 4, researching stocks. Now we get into the meat and potatoes, okay? There's two ways to research stocks. One is fundamental analysis. The other is technical analysis. Now, fundamental analysis, you can remember this by the acronym ICE, I-C-E. I is for industry trends. C is for comparing the competitor's performance. And E is for economic outlook. Okay, so industry trends. You want to focus on industries that are favorable for long-term growth prospects. And like I said, your brokerages may have, these research tools, but if not, there's free tools online. For example, fidelity.com. And I'm not advocating fidelity.com, but this is just an example. You can go to fidelity.com. You can click on the news and research tab. Follow it all the way down until you get to the sectors and industry overview. Once you are there, you will be able to see all of the highest performing sectors for the day. And let's say that energy sector is the highest performer. So you would click on the industry for energy sector. And then you will come to a section that says find investments. Once you click on find investments, it will give you a list of the top 10 performing stocks for the energy sector for that day. So here's a tool where you'll be able to see all the top performing stocks for that sector, and you have all the competitors. So you're able to compare and do your research right there. And that leads me to number 2, compare the competitors' performance. You want to evaluate how much money the company is making. Okay, and how much money that they're likely to make in the future. And to compare it, you want to compare it also with other companies in the same industry. So here's what you want to compare. You want to look at the earnings per share. You want to look at the price to earnings ratio. You want to compare the return on equity. And looking into the future, you want to look at the projected earnings growth. Okay, and when you're investing, if you're investing in dividends, you want to compare the dividend payout ratio and also the dividend yield. So these are the things that you want to look at when comparing the competitors' performance. Okay, and the economic outlook, we're still on fundamental analysis. Okay, so economic outlook, again, you can look up these tools through your brokerage, but if it's not available, you can also look online for free on the company's website. And what you want to look for, the investor or the investor relations page. And you'll usually find their financial reports there. Okay, sometimes you may be able to listen to their quarterly meetings if they provide a link to their webcast. So let's go on to the technical analysis. And I know I'm going through this quick, but maybe you'll be able to review this in the video. Technical analysis, you'll be looking at the charts. You're looking at the trend based on the long-term or short-term goals, okay? And you're looking at the price movements. So for long-term, you wanna look at the price movement for 5 to 10 years, the last 5 or 10 years. And again, this is for long term. You're looking at the charts and you're looking at the price movements, okay? For short-term goals, you want to look at the price movements from the last 30 days to the last 6 months. And for day of swing traders, you want to look from the last hour or the last day to the last 30 days, okay? So after you do your fundamental and or technical analysis, because some people like to do both, you want to identify if the stock is on sale, okay? If this stock is at a discounted price. So when doing your technical analysis and when you're looking at the price movements over a period of time, ask yourself, is this price lower or is it higher than it was 30 days or 6 months or even a year ago? Is this on sale? And then you also want to look at your entry and your exit points. You want to determine and pinpoint where you want to enter a trade and where you want to exit a trade. So here's what I do. So there's multiple, but for the sake of time, I only discuss one, and I'm going to discuss the buy the dip strategy. So let's say I'm looking to do a short-term trade. And again, buy the dip, right? That means when a price significantly drops or declines by at least 10%, you would buy that stock at the lower price, at that price, and that's called buying the dip. And on my end, I personally do a little more analysis. So what I do is I look at the last 5 to 30 days, and I will pinpoint the lowest dip to the highest dip. And that is my range for my entry point. That's what I'm looking at and where I want to enter into a trade. Then I would determine the average increase rate, the increase percentage from each dip to when it came back up again. So every time it shows a dip and it came back up again, I would calculate that amount and determine the average increase rate or the increase percentage. And that will be my exit point. So whether the average increase rate shows a 10 or a 20% profit, first I have to determine if I'm okay with a 10 or 20% profit. And then I'll go ahead and sell, and I'll put in a limit order. And what a limit order is which means that I'm selling at a particular price or better, a price or higher, okay? So I'll go ahead and sell, I'll put in a limit order at a price increase of either 10 or 20%, depending on my analysis, okay? And this is just one strategy that I do. And so now that you know how, what your budget looks like, what your budget is for your investments, and you know what your personality is, your investment personality, and hopefully you can find a brokerage that's right for you. And now that you know how to research stocks, you're now ready to practice trading. And so it's a smart idea to practice trading before conducting real-time trades. So here's just 4 apps that I've written down just for practice trading. Number 1 is Think or Swim. The second one is Webull Paper Trading. The third one is Wall Street Survivor. And the fourth one is Investopedia Stock Simulator. Okay, so I hope this was some help to you. I know it was a lot in a few minutes, but hopefully, like I said, you can roll the tape back again and go through the video and just write down, take your time and write it down and follow the steps. And this is just a brief overview about investing in the stock market.
This overview was amazing.
Yeah, I try to pack it in. Yeah.
I'm gonna have to, I was like taking notes. Like if you look on the Facebook feed, I'm like typing all the points you made. I learned a lot. Like I've mainly only invested in mutual funds. So you giving me some confidence to actually want to like trade options and get into stocks and some day trading. So thank you so much. If anyone has any questions, we're going to allow a couple of minutes for questions before we go into our next segment, because it's going to be tons of information gathering. And so this is going to be one of those things where you just want to watch the replay over and over, so that you can get all of those points. So any questions?
So there's a question on Facebook. It says, is it smart to invest after retirement?
Yes, you still can invest after, as long as you're living, there's still a future to make money, okay? So you can have different goals. I mean, some people, even after they retire and they have whatever money they have for retirement, some people have another investment account for if they want to do another property, or if they want to invest in real estate or what have you. So that doesn't mean just because you're in retirement that you're giving up on investing. There's still always, as long as you're living, God gives you room to prosper. Okay, so it's always time to invest.
Okay, and so your thing is, but whatever you do, especially in the beginning, be willing to lose it.
Oh yes, whatever you do. That's why I say only do your disposable income. So whoever asked that question, I'm not saying use your retirement funds. I'm saying use your disposable income after everything is paid, including your savings that you plan for. Do another account out of your disposable income. Let's say after everything you pay, you had $200 left over for that month. Maybe you want to put $50 or $100 towards an investment fund or a brokerage account.
Okay. All right, looks like that's the final answer we have at this point on Facebook.
Awesome. Well, we're going to go ahead and turn the mic over to Mia. Thank you so much. I learned a lot, seriously. Like, you made it really simple. You broke it down, and I learned a lot. So thank you.
So to me, it's not going anywhere, right? So if more questions, you're staying the whole time. So if more questions come in, we can come back at you.
Yeah, I'll be here.
Okay.
So we're going to go ahead and bring Brian Livingston, owner of Newberry Pest Control. He's been an entrepreneur for a very long time. I think possibly longer than I've been an adult. So Brian, I am excited. Not trying to put your age out there.
Oh, that's funny.
But I'm going to turn the floor over to Brian, and I'm so looking forward to hearing his wisdom. He has dropped nuggets of wisdom on me since I first met him. So I can't wait to hear in tonight's meeting.
Well, once again, thank you so much for inviting me to be on this panel tonight to share a little bit of information I can to maybe hopefully inspire someone to be their own boss or start a business, whether it's part-time, full-time. So we'll just jump right into it. And what made me decide to start my own business? I have a retail background, so I worked in retail for over 20 years, and my last position was store manager for Walgreens. And I really enjoyed that job up until the last 5 years when the company changed to being more about corporate as opposed to taking care of the employees. And during that time period, I started reflecting back on, is there something I'm missing here? Is there something I want to do differently with my life? I mean, we're making decent money, but money isn't everything. I wasn't happy with what I was doing that particular time. So I thought about a previous time when I had a previous career in between working in the pest control industry. And I enjoyed going out, servicing homes, speaking with customers and individuals, and learning, exactly, figuring out what I wanted to do in my life. And I enjoyed that time period because I got to fellowship with people and help them achieve goals, getting rid of the bugs in their house. That's just one of the things, but I got to know them as a person. And I got to work with people that wanted to work with me. And I missed that. And that's the thing that I was missing working in retail. So I knew it was time for me to move on. When you start looking at the operating statements in the stores making $10 million and you're not even making $50,000. So it's time to move on. So setting the schedule, that's something that I learned. I was able to set my own schedule and work with the people that I really wanted to work with in order to help them to grow their business. And what I really liked about the pest control industry, I'm working in different cities, working with different people, and I'm also learning and building the brand as well. So when I started Newberry Pest Control about 7 years ago, it didn't take a lot of money to start the business, but I leaned on my mentor who told me that you can start a business. You just have to start small, advertise small, and as you grow, you add more money into your budget. That's one of the things that I started. So my advertising started off with just basic word of mouth, asking my customers for referrals. And then I moved on to Facebook, taking pictures, posting posts. Then I went on to Twitter, doing similar things, answering questions, Snapchat, then Instagram. And I worked my way up to getting a website to where I can do a little bit of advertising on there, and it targets certain people. Then I also joined an organization called BNI, which is Business Networking International. It was a word of mouth organization where we meet on a regular basis for passing each other referrals. And then I also use magnets. So whenever I go into homes, I take magnets. Once I do the service, or if it's just a consultation, I leave the magnets and they put their pictures on the wall. So if they need a pest control service, like, hey, there's Newberry Pest Control. And so what type of business is pest control? Well, basically what it is, we go into your home to make sure that you don't have any pest issues. The goal is to get everyone from having an issue to not having an issue to where it's going to be corrective action. It's not going to be corrective action, it's going to be preventative maintenance. Prevention is the best protection. That is the tagline of our company. Not only can it give you a peace of mind, but it can save you money. It's going to cost you a lot less to maintain a service than to have issues in your home and have to call out a pest control company. I know I kind of went through that kind of quickly, But if anyone has any questions, I'd be happy to answer any of those questions.
Yeah, I got a question for you, brother. Going in, can you hear me? Okay.
Do you have another device on in the background?
Ain't nothing here.
Okay.
I was just wondering, going into business, dealing with your own business and dealing with employees, you know, I don't have a lot of background in education about, you know, payrolls and this and that. How did you maneuver that in there, just in case I just come up with this idea to go into business? How, you know, what would be your step to educate yourself on maintaining, like, you know, ordering stuff, payroll and all this kind of stuff, just not having a business without this kind of, don't you got to have some kind of business sense too?
So when it comes down to ordering supplies, you want to just make sure and order enough supplies to where you don't run out. Let's say you want to have enough to do your business for the next week or two. I'd say 30 days would be a good supply. I say 30 days is a good supply. And you just want to make sure and order enough to where you don't spend all of your capital. You want to have a budget. You have to come up with a plan and a budget, how much money you want to spend on your supplies, your salaries, and unforeseen expenses where you may need to do some repairs, depending on what type of business you're going to be in. If you're going to be in pest control, you may have to do some repairs to your vehicle and things like that. But as far as payroll, QuickBooks is something that you can do payroll through QuickBooks. And most companies don't do payroll. I didn't do payroll right away. I just basically took money out of the business until I got to the certain point to where I started taking a salary. So to make sure the business stayed afloat, if that makes sense. And once you get to a certain level, you want to make sure that, you know, your expenses don't exceed what you're bringing in. So you can stay in the green and not in the red, and you can be in business. But in the first 5 years, you may not be in the green, you may be in the red. That's why I started off part-time. You know, I started and then I ended up going into business full-time. Does that somewhat answer your question? And then you're muted. You got to unmute yourself. I couldn't hear you.
Yeah. Can you hear me now?
I can. But
yeah,
one thing
you
that
sent me in the right direction.
And they were able to help me, steer me in the right direction. And I had questions. That's one good thing about this referral organization that I joined, which is called BNI. There's a bunch of other business owners in there. You can get free advice from them, how to run your business, and you have questions and lean on your friends. And you can also Google a lot of things. On the computer is a good resource to find out a lot of information as well. And then there's also like business offices down in a lot of our cities to where they can answer some questions for you.
That's good enough. Thank you.
What else you got?
I'm good. I'm listening. I'm learning.
I think it was pretty. I think it was pretty good. That you were able to. Pest control wasn't necessarily something that you said, oh, you know, when you were little, I want to be a pest. I want to own a pest control. But you knew what you knew that you wanted to do something to create something different for yourself, and then you reached back on something a skill that you had developed, and it didn't have to be something that you had mastered or dreamed about your whole life, but you saw an opportunity in that skill set. I think that was, I think that was pretty awesome to go back, because sometimes I think people are afraid to go out there because they think they have to have a certain skill set mastered, but it doesn't sound like that was something that you had mastered your entire life.
People skills. You know, we're not always born with people skills. And some people have better people skills than others, but that's something that you can work on to be better at that. And I always enjoy working with people and trying to help them. And there again, like my mentor who owns Melrose Pest Control, he said, listen, he said, you've been spraying your own house all these years. Why don't you just go ahead and go into business? And that was always in my mind for the past, 15 years. But it wasn't, the timing wasn't right. From the Lord didn't put it. It wasn't my time. I could have started it 20 years ago. because basically how I got started, you can apprentice in the industry by working in it for 3 years. It doesn't have to be 3 continuous years, as long as it adds up to 3 years. I never even thought about that. But when I got to the end of my rope in retail, I said, you know what, I got to figure out something. I want to do something different. And then I researched it, and I said, all you got to do is go take the test. And I said, you know what, I really enjoyed doing that. And I just been blessed to be able to grow the brand and the business. And I think God has strategically put me in front of people that can help me, and I can help them. And it's been kind of a synergistic relationship that I've been able to build over the years with different people. And I just can't say enough, or just sometimes you just got to take that step. You just can't let fear stop.
All right. I appreciate that, brother. Kiara's on you.
Well, the key point I took away from that was just taking the opportunity and realizing what you enjoy and what you're good at, and just starting from wherever you are. Like, I thought that was huge. I have been guilty of not doing that, and it didn't work out too well. Like, trying to start above where I was and putting myself in a hole and becoming very stressful. So that was some really, I think that was some great wisdom that you dropped on everyone, that can be applied to any business that you start. So thank you so much, Brian. I appreciate it.
Thank you. I appreciate having me.
Yeah, so Brian did a great job. And next, we're going to hear from Tanya, who I've known since I was in elementary. I love her. She has been just an amazing part of my life. I've stayed in touch with her over the years, and I'm not going to go into all the different things that she has helped me with, because that has nothing to do with tonight's conversation. But I found out that Tanya is, that she is doing something that I want to do. She is a real estate investor. She has owned multiple properties, and she has some knowledge in that area. And so I wanted to invite her to come and share how we could learn some things and get started in real estate investing as well. And just her sharing from her experience in getting into real estate investing and owning some real estate. So Tanya, I'm going to turn the floor over. I'm going to mute myself, and then you have the floor.
Great. Well, thank you so much. I am very happy to be here today. Real estate investing was kind of like my side hustle. And I have to thank Reverend Rawls for telling me many a years ago to step into confidence. I think he knew that I had something to share a long time before I realized I had something to share. So if Rev is encouraging you, I would highly recommend really listening to it, praying on it, meditating on it, and figuring out how to make it work, because he is a blessed man. So I am very happy to be here today. So I put together a couple of slides. I work in corporate America, so everything I do, I have to have slides for. So I wanted to bless you guys with some slides today. I'm going to share that real quick. Okay. Come on. Here we go. All right. Can you guys see? All right, good. So, so today, just going to go through a little bit of real estate investing. Like Tamia said, this is not investment advice. This is not legal advice. It's not tax advice, financial, or anything else. So I'm here just sharing my experience and happy to share as much as I can. All right, so who am I? I'm a woman of God. I'm actually AME. So I was baptized by Reverend Rawls in the AME church. So I am AME. I'm a mother of 2 and a wife. I'm a mentor and a coach, both professionally and personally. I've had a lot of friends over the years that have stayed in touch with me, and I've mentored them on through their life choices. I have a master's in accounting. I'm a UF grad, so go Gators. I'm a certified public accountant since '03, and I'm a landlord and a property manager for 15 years. So I've had short-term rentals. I currently have long-term rentals, and then I also manage all of my dad's rental properties as well. So I'm going to definitely touch on things that Tamia and Brian also shared today. So my advice is, one, you start with knowing your data, right? So getting to know yourself financially. There is a ton of information out there on Google. The key there is just looking and seeing, usually if they're popping up on the first page, they're probably reputable, but just kind of looking at it and making sure what you're clicking on looks like, you know, that it doesn't have some weird, funky letters or numbers or symbols in it, to make sure that it's valid. So when you're thinking about real estate investing, the first thing that I do is, if you even think that in the next 10 years you want to own real estate, know your credit score. Get to know your credit score now. If you want to buy anything in life, get to know your credit score now. So what is it? So basically the agencies assign you a number, and the borrowers look, or the lenders look at that to signal whether you're going to repay your debt or not. It doesn't mean that you really have the ability or not have the ability. You could have $1 million sitting in the bank, and if you don't use credit, your credit score is not going to be good. So if you want to use credit, you have to kind of play by their rules, and you have to know their data. So start with knowing your credit score. If you have a credit card, your credit card agency probably gives you your credit score for free. I know Chase gives it to you for free. Discover gives it to you for free. So when you log in online and you look at your statement, and there they'll say credit score, and you just click on that, and then you get to know your credit score. Is it correct? So if you log in and you see your credit score and it's not up in the 700s or 800s, you want to understand why, right? So the first thing I would do is I'd run my annual credit report. So I put the website up here. It's free. You do not need to pay anything. You do not need to put in a credit card. You should not have to enter in any sort of financial data. Now, when you run it on the credit agencies, they are going to ask you questions about your credit history. They may ask you for your social security number, but you only want to use this free credit report site. There's plenty of paid ones, but this one will give it to you for free. And then you can look in there and you can see what the data is and find out, is it right? I had a girlfriend recently who she had something, she thought it was resolved. The hospital had put a claim against her that wasn't real. So she had to reach out and she had to get that settled. Her credit score jumped 70 points as soon as she got that settled. She had trusted that they had done it and she didn't verify. And she found out she ended up suffering because she ended up getting a higher interest rate when she needed, because she needed her credit and she didn't know her data. So if you think at any point you want to use your credit, know your credit score, look at it, get it resolved. Everything is figure outable. You can solve any problem. So just know your facts. The next thing, so Brian and Tamia both, indicated on this, know your monthly income and expenses, right? If you're going to invest in real estate, the kind of your worst case scenario is you go, you invest, you overspend, and then you can't pay for it, right? And then you're losing it. And that hurts, right? When we lose property, when we lose something that we thought that was our path, it hurts. So the way that you can be knowledgeable before you get there is to go down, make it simple, make it as simple as possible. You don't need all the ins and the outs. Just look at your bank statement, see what you spend, see what you bring in. Just look at those numbers. You don't need all the details underneath. Just know those numbers and look at that. And if you're not doing it already, I'd encourage you to every single month, look at how much money comes into your bank account, how much goes out, know those numbers and decide, do you like them? If you don't like them, start digging in, figure out how to solve them, how to make them something that you do like. Mindset's key, right? So if you're looking at your numbers and you don't like them, the best advice that I ever got was to figure out how to make it something you're happy with. When you can be happy about what you're looking at, you're in control of that, right? And I think a lot of times things can come up, and it's easy to think like, well, this is happening to me. But if it's happening to me, I can't change it. But if I can stop for a minute and say, okay, if I weren't in this circumstance right now, how can I change this, right? What could I do to prevent this from happening again? It empowers you. It gives you the power. It gives you the control. So whenever I find myself trying to be frustrated with something or point blame at something that I'm dealing with, I always stop and I try to look back and go, what is it? What can I control? What can I do? The next thing I'd say is decide, are you buying a residence? Are you buying an investment property? And then how are you going to fund it? So if I'm buying a resident, when I was buying my residence, I looked at it and I said, okay, I want it to keep the cost within 30% of my income. So I want to know how much money is coming into my bank, and I don't want to spend any more than 30%. And when I buy a house, I realize that I might need a new roof. I'm gonna have to call Brian. I'm gonna need some pest control because I'm not gonna want to live with those pests because I want to take care of that asset that I got, right? I'm gonna have an electric bill, right? I'm gonna have a utility bill. I might need to pay for garbage depending on where I'm at. So just kind of looking at that and saying, what kind of costs do I have? What's going to be coming down the road? And how do I maintain it, right? Do I know how to clean my dryer vent to make sure that I don't catch my house on fire? If I don't know how to clean my dryer vent, then I need to pay somebody to do that for me. So kind of looking at those costs, you can Google, house maintenance checklist and looking at it and saying, okay, how much is that going to cost me? And include all of that in your costs when you're deciding if you can afford this. If you're buying as an investment property, the one thing that I'd say is look at it and say, are you buying long-term? Or are you buying short-term? So I've done both. I've bought homes that were just a short-term that I was going to hold it for a short period of time and I was going to flip it and then resell it. And then I had other homes that I was buying it for a long time. I still own them, right? Like I have a home that I've owned since 2006, and that's part of my retirement plan. That was, to me, that's how I diversified my retirement, is I found a home that I could afford. I made sure that I could afford that mortgage on my income, even if I didn't have rental income. So if you're buying for investment, I would highly recommend making sure that you at least have 3 to 6 months of those payments in the event that the market turns down, right? So that's how I get comfortable and how I'm confident that I'm going to be able to afford this. If I'm buying it short term, right? Again, I know plenty of people that have lost homes because they bought it at the height of the market. They thought they were going to flip it and sell it for a profit, and the market dropped. And right now, just my personal opinion is the market's extremely high for real estate. It's extremely high for real estate. That doesn't mean there's not good deals out there. But if you're investing, make sure you're doing your background, you're doing your diligence. Funding. So how are you going to fund it? Most of the homes that I have a mortgage on them. They do require some level of cash down. I've bought a house on a credit card before. So I bought a home that was in need of a lot of repair. It was in a small town in Florida. And so we were able to buy it on a credit card and then do our remodels and then refinance it into a mortgage. So I share that with you because it tells you that there's more than one way to do it. Right. So I think a lot of times we think there's only one way to get there. And if we want to pray on it, if we want to meditate on it and be creative, there's more than one way to get there. So getting to know your goal, know what you want. And then property. So now you want to know, all right, what am I going to do? So you've kind of done your diligence. You know what you're looking for. You have a path forward, right? You're not just jumping into it. You know what you're looking for. Then you start looking, right? And along the way, you can start looking to get ideas. What's the price, right? So when I look at something, I'm going to drive through the neighborhood. I'm going to drive through it at early morning hours, late at night, middle of the day. I'm going to look at what it is and say, is this the type of neighborhood I want to be in? I'm going to look at it and say, how established is it, right? A lot of times you go into a neighborhood, it's beautiful, it's brand new, but then it's not been there for a while and you see it. And then over 5 years, 10 years, it's not maintained the same way. So it's not what you thought, right? When you originally bought in. So kind of do a little bit of research, use your gut, pray on it, and know, is this the area for you? I always recommend buying the house that looks the worst in the neighborhood and make it the nicest. That's how you get a good deal, right? If you're willing to put in a little bit of labor and a little, well, maybe it's a little more than a little bit, but if you're willing to put in some labor and some effort, you can buy a house. Like we bought a house that was completely overgrown. It had plants all over, but once we went in there and started cleaning the brush up, it was a beautiful home. It needed a paint job. It needed the lawn maintained, but it was a beautiful home and it served us very well as a very good rental property. When I'm trying to figure out, so like right now, if I were going to buy a house in this market right now, I go to the property tax appraiser site. I see what was the cost of that house when it was originally bought. Right? I'm going to look at the year that it was bought. So if it was bought in 2010, I'm probably going to disregard the price a little bit because that's when the market was going up, right? But if the house is a 1980s house, right? And I'm buying a 1980s house and the property tax appraiser is going to tell me how much that house cost. And then I'm going to find a compound calculator on the internet and I'm going to put in that cost and I'm going to assume a 5% increase per year and how many years it is. And it's going to tell me what's the value of that home today. Because if the price of the home's increasing about 5% per year and you're within range of that amount today in 2021, it's probably a good investment, right? If it was worth that in 1980 and now you've got a 5% increase per year in 2021, that's probably a good investment. If it's not a 5% increase, if it's a 100% increase, you're probably at the top of the market, right? And so that's going to be a much bigger risk than if you've just got a nice 5% return. Cost. So the other thing, so kind of going back to that budgeting is knowing your cost, knowing what it's going to cost you to buy the property, right? So when you buy a home, there's a lot of extra cost outside of just that price that you see, that offer that you put in on the property. So you need to know your closing cost. You need to know the repairs and maintenance cost, right? And again, you can Google it. You can see what are out there. Most of the costs that are on the closing costs, like they're fixed, right? It's based on a percentage of the value of the property. So they're fixed amounts. So you can go out there and you can see what's out there. And then that way, again, you can budget and you can know what you're really going to spend. So you know what you're investing in. All right. So that's it. Any questions?
Excuse me. I have a question. I owned property in North Carolina, but I sold it because it was in North Carolina. And I took the advice of the real estate agent and all that. It was like a 2-week turnaround. And then I said, I should have done more research because the house was worth more than I sold it for. So how can I, if I want to invest further, what would be your recommendation for investing out of state, which is something I'm not really interested in doing, but you can make me feel better, or in making investments here in Florida. I watch a lot of the television shows, the ones with the fixer up and all of that, and they buy houses that have been recalled or repossessed or whatever, and then they have, these auctions. I mean, what are some of the other ways that you would suggest instead of me, making the same mistakes twice?
Yeah. Okay. So what I would say, right, is one, you can't change it, right? You sold it, you can't change it. So the first thing I'd say is, you know what? I'm going to learn from that. I'm going to move on. And there must be a reason that happened, right? Who knows what it is? Sometimes we don't figure it out, but how do we grow from it, right? If I'm looking at cost, and I'm not going to probably say this right, I call it Zillow. Maybe it's Zillow, I don't know, but it's Zillow.
And they were the ones I should have looked at, because they had it much higher than the real estate agent told me I could sell it for. I just feel so duped.
Yeah, I'm so sorry about that. And that's where it's like, I say this with medical professionals too. You have to stand up for yourself, know your data. If somebody's telling you something, just always verify it. I highly recommend it. But so I use realtor.com, and just look at like, what is that market? But again, like even with that, in the top of the bubble, those sites are going to give you a much higher value than it might really be, right? So just because the value is really high today doesn't mean that in a week it's not going to drop in half, right? So if I'm on the buying side, my actions are probably going to be a little bit different than if I'm on the selling side. If I'm on the selling side, give me as much as you can give me, right? Like I want to sell as high as I can. And sometimes even though those prices are high, that doesn't mean you can actually get a buyer that will pay that. Right. That's the other thing to remember, is that's just an estimate. And then two, if you are selling and they're not buying cash, if they're buying with a mortgage, you always have the chance that I know people that have had contracts, and then the investment or the appraisal company came in and said, nope, that's not the value. So even though you had all these other places saying that was the value, they decided that wasn't the value. So if they want to get financing, then the seller has to come down in the price, right? So again, like all of this is fungible. It kind of moves, right? So what I mean, the way that I generally buy property is I'm just going to look on those sites. I'm going to see what it is. And then I'm going to call people, right? If I know that there's a property that I like, I'll look and see, like, do they have a for sale by owner? I'll buy it that way. If you do that, you need to know a good title company. Like you need somebody that'll write a contract for you. Otherwise, the best advice is to go through a realtor. But again, I would ask my friends who they trust, right? And why do they trust them? That's the other question, is why do they trust them, right? So how do you know this realtor? Why do you trust them? Because there are good people out there. You just got to find them. Maybe that helps a little bit.
Well, it did. And there was a bit of a bidding war. So, right. I did have a little bit there that was comforting, but really, I just went too fast, too quickly. Yeah. But thank you so much.
You're welcome.
So I want to see if one of you all can help me out. So time is the one thing that I cannot find. And so I'm a pastor, and so I'm in a position to where, God doesn't give me a lot of leverage. And he makes me commit what I don't have committed to my family. He makes me commit to community and ministry. And so I've always been an entrepreneur before ministry, was self-employed, and then in real estate. I so bad want to get into that lane, but the only place I'm finding the time is in the stock market, and that works out well. It works out well. But it's almost like I wish I could be in a position like Shark Tank, take my resources, my money, and give it to somebody with a great idea, and say, and then I, and invest as a partner in that business. It seems like that's the only way that I'm going to be able to do anything other than stocks, which I always continue to do. What do y'all think about that area right there, and how does that work, finding credible and good people that you can invest into to be partners and receive revenue from that partnership?
Well, Rev, you know that I have an opinion on a lot of things. So my thought on that, right, is one, I've seen a lot of partnerships in my life, and my personal opinion is you don't do them.
Okay.
So
You just killed that.
sorry, Rev. I've seen it done among family. I've seen it done among friends. And it's usually not always the outcome that was intended. And so if you're going to do it though, one of the things I'd say is choose an amount of money you're okay losing, right? So again, if you're investing, choose an amount of money you're willing to lose and try that way and start small. And if they return well, you're good, right?
Mhm. But it's not a, you don't encourage it. So I guess I'm just gonna have to get God to invent some more time for me. Give me 28 hours in a day.
Yes, he will. Just keep praying. He'll send you somebody. I do trust that.
And I'm going, Tamia, I have one for you, Tamia. So right now I'm just a little frustrated. So I did a little, when you talking about that margin, I forgot what you called it, but that top and that bottom, you know, I'm looking at it over a period, you know, of 6 months. It seems like this is the low point, this is the high point. And so I try to judge that. And so a few months ago, you know, I was doing well. I left a good portion of money in Bitcoin for a good while and did well. But then I tried to judge a rock. And when it hit like 29,000 and it had been like 15,000, I was like, man, let me sell because I know it can't keep going. And so I sold, made good money. Then all of a sudden, it's all the way up to 52, then 60. And I'm like, oh, and I can't even figure out. It's almost like jump rope. When people do the thing and you're trying to figure out when to jump in, I'm scared to jump in because it's rising. And so I went in the other day. It looked like it had kind of peaked out. It looked like it had kind of dropped down.
You mean Bitcoin?
I went in and tried to buy low, and then it kept going low and kept going low of last week. And so now I'm just waiting to it to get back to where it's
creeping
so
back up.
Yeah, it's going back up. But what my mind is now, because I got bit, it's almost like when I get my money back, I'm just gonna snatch it back out and just leave it alone and sit back and watch it. What are your thoughts with that?
Well, me personally, as soon as mine came, I think it was at 35 at that point. That was a while back. And as soon as it came back up, I made about 3,000 on it. But as soon as I made that, I put it into Ethereum. And it's doing well with Ethereum. But I would say you can still use the buy the dip strategy because, you know, experts, people that I know, you know, at the news networks, they're predicting it's going to be up to 100,000. So I would still wait till it dip because, as you can see, it still has a period when it goes down again. Right. So I will wait. I will wait it out until it dips again, and then I will buy in again. So you should be good with whatever you made. Just you can't look back. Okay, just take the profits. You know, you may be looking for more, but take the profits that you made, sit on it, and when it dips again, buy the dip.
Okay.
I do have one more question. Tanya, what do you think about rental management companies? You do your own management.
I do.
What do you feel about rental management companies?
Yep. So if I'm going to use a rental management company, I'm going to look at, I'm going to do my budget, right? So I'm going to look at how much money I have coming in from the properties. What are all of my costs, right? So every single cost, I'm going to look at everything I'm going to have to pay on it. I'm going to make sure I understand how much I'm got to pay for the roof. If the roof goes bad, you know, if something breaks or if I need to call a plumber, because I do have properties that are not where I'm physically located. So then I need to hire an expert in that area, right? To come in and service it. So I'm going to make sure I have all of those monies and I know how much that is. And then say, okay, what's my profit now, right? So, and I go ahead and I take out my maintenance up front. So I have the money saved. I want to make sure I have the money available when the expense comes. I don't want to be looking after the expenses here, right? So I kind of include that monthly and say, all right, that's my cost. And then if it's a 5% for a management company, great, right? And I can afford it and I'm still going to get a return, then that's good. But you kind of look at it and just say, am I comfortable with paying that fee, or do I just want to do it myself? Right. Yeah.
So Tanya, tell me this right here, and not to be a vulture,
Yeah.
but so right now, because of coronavirus, there are a lot of landlords, property owners that are really catching it because of the moratorium on evictions, and which is going into a year. And so, and I know a lot of those property owners are probably going to end up foreclosing on some of those properties. It just got extended a little bit longer. I know you said this is not a good time to be a buyer because of where the market is. Is there some strategy, and also the fact that because of what's going on, there are going to be some people that are going to be almost like a vulture strategy. There are going to be some people that are losing properties because are you seeing that out there? Some opportunities coming up?
Yeah. And so right now there's not a lot in the market, right? So right now there's not a lot of properties on the market. So it is still a seller's market right now, but I do anticipate that coming up, there might be more properties coming up again. And a little bit of that is like, if you look and see how properties are being financed, when you're not doing a fixed 15-year, fixed 30-year mortgage, and people are only able to afford the home because they're using some sort of balloon or ARM or some other financial instrument like that, usually they're not going to be able to afford the home when you get a little bit further along. So I think that you're seeing a lot more of those special financing tools being used. So I do think that there will probably be a dip in the future. But again, like, it's just like your stock, right? I could be completely wrong. And maybe we should be buying right now because we're just like midway and it's going to keep going. You know, you don't know. It's just my guess. And so I think that you got to do that. When it comes to rental, knock on wood, wherever it is, I have not had anyone that I've had to evict. And my dad hasn't had anyone that he's had to evict since I started screening his tenants. You do have to watch, right? Like, we had a guy, he's going to give me cash today. He filled out the application. He'll give me cash right now. You know, he really wants the house. I do a quick little search. He got a DUI 2 days ago. So if he's in jail, he can't pay my rent, right? So you have to, like, if somebody's a little too eager, they probably have their best interest at heart and not your best interest at heart, right? So I do think, but then at the same time, like, it's all, anytime you're investing, there's risk in it, right? And you could lose it. You could lose it. You could lose everything, right? And that's where I say, make sure that you have the ability. The way that I do it is I make sure I have the ability to cover the cost, even if I have somebody in there not paying rent. And that's how I get comfortable. But sometimes
it's a struggle, right? Because you got like rates out there, 2.6%. You got property owners that have to get out of it because they're not receiving rent. And but then, like you say, but that the home's at the top of the market. It's a wrestling match. It's a strategic wrestling match.
Right.
Kiera, looks like we're at the top of the hour.
This was really good. Like, this was awesome. Thank y'all so much. Y'all dropped a lot of wisdom. I was just taking all my notes in the Facebook chat feed so that everybody could follow along and kind of see some of the things. But I just want to say thank you. So before we get off, can you all share your websites or like Facebook page, Instagram page, how people can find you before we leave? I just want to make sure that, if you're, because I know some of you are putting out information. Some of you have a property management, like Tanya has a property management company, Brian has a pest control company, and just I just want to thank you for sharing your time today. And I would love for you, each of you real quickly, just to put it out there real quick, how people can find you.
And Kira, in addition to putting the information out there, can you give them just to leave us one parting nugget?
Yes. Yes, please. So let's go in the order that you did your presentations and leave us your information and a parting nugget so that people can, you know, follow and see what you got going on, because you gave a lot of value. And so we pray that maybe somebody was watching who might even invest or buy something from your business and what you have going on as well.
Well, I'm Tamia Brinson, and you can reach me at my website is tamiabrinson.com. And then also on Facebook, my TV show, Mindset for Success. And one nugget is to stay on your goals, whether it's long-term or short-term. And I got a strategy from Pastor Rawls to wait out and look for when the moratorium lists for investment, another investment opportunity. So thank you, Pastor.
Newberry Pest Control. You can contact me at my new website, newberrypestcontrol.com, or you could call 352-474-6021. I guess our parting nugget would be, even though you may be working a full-time job, I meant to say this earlier, I forgot to say it, but find a hobby. If there's a hobby, something that you like doing, you should never put all your eggs in one basket, so to speak. And that's what I didn't do when I was coming up. I didn't do that either. So you get to a certain point to where your career and your hobby are making you the same amount of money, or your hobby is starting to make a little bit more than your career. It may be an opportunity to be an entrepreneur and just move forward. That might be your divine blessing. So that's my parting nugget.
All right. And I am Tanya Slayton. You can find me. I do not have a website, but you can find me at Tanya Coaches. I put it in the Facebook feed as well. So I do have a Facebook site and I have an Instagram. I'm more active on Instagram, but feel free to send me a message, follow me over there. And I am always happy to give you my opinion, but not my advice. Oh, and then my nugget is get to know your facts. If you don't know your credit score, find out your credit score. If you don't know your monthly income and expenses, get to know them. You can control them once you know them. So get to know them.
All right. This was good. Thank you so much. I have also put in the chat everybody's websites, your ads. So thank you. We have Carrie in the comments. Thank you so much. And she's just thanking all of you. And I just, if you hopped on this, like not right at 7 p.m., I highly recommend go back and watch the replay so you can catch the whole thing, because the whole thing was amazing. And if you only caught the end, you missed out on a lot of good stuff, because the whole thing was awesome. So I'm going to turn it over to my dad, Pastor Rawls, to close us out. But thank you all so much. This was amazing. And I'm so grateful for each of you for sharing your time with us and speaking.
I want to thank all the panelists, everybody that joined us, whether on social media or on the Zoom platform. This is another ministry of Greater Bethel AME Church. It's our financial wellness ministry. To be in Christ means he ministers to our total person. And so not just the spiritual where we do mystical things, but he ministers to our whole person, financially, spiritually, physically. And I want to thank Kiara for what she does in our financial wellness ministry every month on the fourth Tuesday of the month, same time. We have a new topic. I'm not sure what the topic is going to be next month, but I guarantee you it will be good. And so share this video and then put us on your schedule for the fourth Sunday in May. Looking forward to a great time. And a big announcement for everyone. We're finally getting this coronavirus under control, vaccinations out there. And so Greater Bethel will be back in the building. We've been away for more than a year, about 14 months. And so on the first Sunday in June, we will be back in the building. But let me tell you something. Just because we were not in the building, we did not stop doing ministry. We amped up ministry. We presented ministry in all types of ways that we will not stop doing. And so thank you so much. God bless you to our panelists. God bless you to our guests. Thank you, Kira, my baby, for doing such a wonderful job.